It's Kimi here. Who else would it be? This is Observations with Otsu. This is Tuesday, May 28th. A little bit delayed on this. Usually do this on Mondays. That's completely okay. Um, Hope you guys are having a good week. We've kind of had a mixed bag overall in the markets. We'll kind of get into that. There's not really a theme for this video. I'm going to just kind of keep this technical. I got a very busy week and dealing with some things outside into the real world where we touch grass. So anyway, the introduction basically going to be Bitcoin. We're going to go over that, of course, weekly, top down. We'll cover Ethereum as well, Solana on top of that, and I will probably discuss a meme coin or two. I think Bonk looks good to me. I actually, you know what? We'll do Bonk, we'll do Whiff, and we'll do Pepe because I think the three of them will kind of give us the differences on what meme coins are doing right now. So anyway, that's the intro. Also, go ahead and check out my scripts. I've got Apex scripts that are available. Um, that they've been treating me pretty well. We also have Apex Academy coming up, so I'll link a list. I'll have a link for that wait list, and yeah, let's just get started. So first things first, I'll keep this very brief because I want to keep the time restraints on this. So Apex Academy, which I'm branding as Apex Academy Volume 2 because we did one not too long ago, a little bit over a year ago. We're going to have a version 2 of that coming up. So I wanted to introduce that to you today. Um, Things that I'm going to talk about. So if you guys don't know, most of you that have listened to me for a while know this, but Apex actually is it's kind of an abbreviated term. It stands for ARUN, price, action, and exponential, which is really more of a um, kind of a synonym, so to speak, for trend and momentum. So that's my system. That is a system that I created for myself. That is how I learned how to trade from scratch, with 10 years of experience combined with stocks and crypto together. Most of it is in crypto, but I learned over time. ARUN is a very big thing that I've learned for me. It's something that most people just don't use, and I'm not saying that that's good or bad. It's just something that I adapted to learn. I learned an advanced way to apply that more so than the actual creator himself, and so that's part of what I'll teach you, which is here the ARUN mastery. But this whole Apex system is I've learned to use ARUN in combination with price action, in combination of momentum and trend trading, and I use those together to create that system to trade. And that's something that I've been doing pretty solid for like at least 4 of the past 10 years, um, especially so for the past 2 to 3, really past 3, I should say. And so that's where, I had a lot of people talking to me about, hey, maybe you should, I'm interested to have you teach me how to trade. And so that's what I'm going to be talking about. And so that's part of this. And so a lot of people are either trend traders or price action traders or one or the other. And that's something that people are either specialized in one thing. I am not. I have a little bit of everything, and I basically take the best of the three of those. Because ARUN does have its downsides, even though it has a lot of upside. It's my favorite of the three, of course. But everything, this works better to me. This is how I trade. It works really great for me. And it's been an offering where you guys have wanted me to cover this. So that's what this academy is. It is an 8-week class, as you can see right here. There's a couple things that I missed out. I didn't mention on here. This is mainly just the technical analysis and trading aspect. There's also other things, how to handle your emotions, how to create your own trading strategies, things like that, handle noise and fear and risk management and applying portfolio applications, things like that. So it's going to be a very intensive 8-week class. The first version of this was 12 weeks. And so what I did was I actually took out a couple I took out maybe 4 or 5 things that I think we're a little probably less not unpopular, but I think less effectual. And so I took those out. I added a couple more things in, and then I crunched it down into 8 weeks. And so that's by design because I think, based off of feedback, 12 weeks was a little bit too long. And so 8 weeks is probably going to be more of that, critical point. So it's really 30 days of trading, you know, hardcore trading education and 30 days of application. and then emotions and things like that. So anyway, I'll keep that short and sweet. If you're interested, I will put a link in the description for a wait list. If I post this on X, I'll also put this in the thread. And I would love to have you. The seats are filling up. I'm going to have a maximum of 50 seats. And I think that we're roughly 50-60% filled. I think I think we might be closer to 70. So you still have time to get in. There's no payment required at this time. So like if I send out, so a lot of you guys have signed up. If I send out a link to sign up and those people don't, if those people decide they don't want to do it, then those seats fill up. So go ahead and sign, even if you think you may not get into it, if you really want to, because the seats might vacate. So anyway, I will be taking a maximum of 50 seats, maybe 55 at the most, but we're getting a good response. So go ahead and sign up if you want. So anyway, that's the Apex Academy Volume 2. Let's get into talking about Bitcoin. All right, so we are getting started here on Bitcoin, and so there's really the biggest thing news-wise is probably the Mt. Gox thing. I mentioned a video in Discord, if you may have watched that, the Bitcoin video, that I think that that's pretty much a non-issue. The problem with those kind of things are that's very tricky, and I don't want to talk about this, so I'm getting it out of the way right now, right? So the thing is, the amount of Bitcoin that's available in this Mt. Gox is less than the daily volume of Bitcoin on its lowest day. Okay, for the past 90 days, the lowest volume for Bitcoin has been $11 billion, and so the transfer with the Mt. Gox was 2.9 billion. So let's just say three. So you're talking like 25% of a daily volume. So if you are trying to trade this, like if you are selling to get out because of something like that, that is probably one of the worst risk to reward decisions that you could make. And so my fear is, I mean, honestly, that's how capitulation starts. It kind of snowballs. I don't think that we're in that nature of the market. But that being said, that's another reason why I don't cater to news, because it allows you to act on your fears and emotions. The whole premise of looking at news is to react based off of how you feel. Okay? There's very little analysis based off of that. Okay, you can base analysis off of emotions. That's why you hear things like be fearful when people are greedy and be greedy when people are fearful. So you can trade based off of an emotional sentiment. I don't disagree with that. The point is, you look at news, you take this personally, and then you react based off of that, off of your assumption. And most of the time, that will probably not be the optimal way. I think it's much more beneficial to create a trading system, and that's not a plug for Apex, because for some people that Apex won't be good for you, and for some of you it will be, and so the point is, at least for me, news based applications just make no sense, and so I just kind of leave it at that. A lot of people think we're getting that reaction from that. I don't necessarily disagree. I think that if you don't look at that beyond the surface level, I think there is a good reason why people would be concerned. And most people aren't going to look past surface level, especially non-crypto people. But we'll see how that goes. But the market's been pretty red overall. You got a few exceptions here, and so could be waking up. I think that we could, and we'll get into that, of course. But we had a pretty good green day yesterday on the holiday that we had here in the States. This is kind of like making up for that, I guess. So there's nothing that's really happened, and I think Bitcoin is a pretty good example of this on the daily. But let's go ahead and start with the weekly first. And so, a few things here. We had a pump up last week, really for the past 2 weeks, so that's been relatively good. We can look for this swing high order block structure. That this is the main one, and so there's a few different ways to look at it. This is your candlestick structure, and then this is your wick structure. This is the liquidity structure. So wicks and liquidity, I use those when I say wicks. So when I say liquidity, I mention wicks. So I use those interchangeably when I'm referring to liquidity. And so I think Wicks are a really good simplistic way to look at liquidity because it represents where trading has occurred but has not occurred in strict volume. Okay, and there's volume profiles, things like that, but for the most part, Wicks will be an area where there was less volume, typically. Not always, but typically. And so that's where you need to kind of push beyond. I mean, that's the whole point of liquidity is like there hasn't been any trades there to confirm a healthy supply and demand structure. And so when that occurs, that's where you get basically chart slippage is basically what that is, right? And so I can go to some examples, but I'll try to save some time with that. So right here on the weekly, this is what we're looking at. So a pretty big range overall. We broke above, we deviated below. Mentioned how that was pretty bad. We actually deviated back above, so now we're kind of within this zone. So now we're kind of hovering there. And so, as far as the weekly, this is as simple as it gets. We want to play the break of this. So if it breaks above 69,000 on the weekly close, then we can re-long this with confidence. Otherwise, we will wait, and if it happens to go below, 65,400, then we can short this. Now, TradingView also kind of changed this with the commas, but that's completely fine. But right now we are still within this blue area, so there's really nothing going on in this particular case. And so that's just kind of how it is with that. I don't necessarily like that, but that's just kind of how it is. We also have, if we adjust it like so, this doesn't really tell us much either. We did have a bounce at this zone based off of this retest area. So this looks okay. I mean, I think like I'm bullish here. I mentioned that yesterday. I'm cautiously bullish. We are bullish at a resistance in the mid range structure. So that's why things are so complicated right now. And that's why you're also getting, when things get complicated like this, you're getting contrasting opinions. You got people that are very bullish because of ETF news. You got people like Donald saying that there's a generational top, and it's just you got everything in between. So it's a mixed bag, and the point is, like, what you want to take away from that is you are always going to hear people that have good ideas and bad ideas. I think Donald is very wrong right now, and he's a guy that has lost my respect over time. Um, it is what it is. I don't follow him anymore. I don't think that he's worth following anymore. I think that he is out of touch, and things like that. And I'm not disrespecting him. I try to respect everybody, and so he is entitled to his own point of view, just like I am. So there's no problem with that, right? But how this pertains to you is that you need to follow what you see out of the markets. Okay, you can listen to me, you can listen to him, you can listen to all these other people, but you need to come up with your own structure. And this is just what I see. Excuse me. Me personally, it doesn't it's not prudent, nor does it make sense to have a very strict rule like I think this will go to 100,000 tomorrow. Like we all know that that's probably not going to happen. But for me to take an absolute statement on something, um, shows arrogance. There's not much prudence on that. Like, I mean, even if you're for sure thinking that it'll go to 100,000 tomorrow, you still need to come up with that as a probability. And that's where risk management comes into play. Like, I understand that I don't care how good my trade is, there is a chance that it will work negatively. I'll get stopped out, or I'll lose maybe a little bit underwater and close it, or I maybe only gain a couple of percentage and things like that, right? So you need to understand that. Like I was pretty sure that we were gonna bounce here at this bullish wedge, this bullish divergence. But you didn't know. That was a scary time. It was a scary time for most people. Okay. And that worked out for me, but I've done things where I've said the same thing and it hasn't worked out. So you just that is the name of what we're doing. That's why risk management comes into play, portfolio allocation comes into play, things like that, right? So anyway, just if there's something you can take away from that is focus on your own system. You can learn from other people. What I personally do, like even now, like there's some guys that I really look up to. Um, and I follow them, and I some of these guys have weekly videos that I watch, but I don't do what they say. I relay that to my own insight and be like, okay, that makes sense based on what I'm seeing, or how can I look at their point of view and say, does that make sense? Why does that make sense? And how does that benefit me? See what I'm saying? Like I can't just be like, well, CBS is bullish on bonk, so I'm just going to long. And I would have made money because it is up, but that's not why I would do that. See what I'm saying? So anyway, kind of a little bit of a rant, so apologies. But with this here, we're kind of stuck in this zone. And as far as Aram goes, we're still completing this bearish consolidation that led into a wedge. It kind of wedged about 3 or 4 weeks ago. Starting to complete here. We're at 21.0, so this is going to take probably less than 3 weeks to finish out. In many cases, this does tend to come out early, so we could look for a cross, maybe like a bearish cross, maybe next week, 2 weeks from now. That's when the weekly structure will change bearish. And so this is something I mentioned last month. You may not know it. You may not remember it. That's completely fine. That we still had a bullish structure, and I said that this is just the beginning. And what I really meant was like the high time frame structures are still bullish at the time. We need to wait for the bearish structures to complete. I'm pretty sold that this is going to cross. The only way that it wouldn't is if we go up past 75,000 here relatively within the next week, basically, which can happen. That's not impossible. But I almost want this to cross bearish so that we can reset the whole structure. And I think there's a disagreement here. I think everybody wants everything to be bullish. I do too. But the problem is you need to look at this in the context of how the chart works. Resetting this to be a bearish cross will allow us for bullish consolidations to start forming by a really good dip, and that's the thing. If this A-ring crosses on bearishly on the weekly, we will have a very, very, very good chance to reload for the next run. Okay. The best example from the last cycle would be like right here. We crossed bearish right here. This was a high bearish cross, so it's a little bit different. But from that point, from the top, we went 85% or 86%, 87, whatever. So we went up somewhere between 85 to 90%. And so that's what we can expect. So I'm not saying that we'll get this big of a drop down, but this is looking more and more distributive to me, which means that we're probably going to come down. And I'm still looking at that 52,000 range. But the thing is, and this is just a theory, if we go down to 52 and then we go back to that 80, now you're looking at 96 and possibly even 100,000. So that's something to look forward to. Even from here, going from that 87, I still gotta keep going up. You're looking at like 125, 130,000. So just keep that in mind. That's something that I don't like talking about. Like I don't like. I'm used to the fact I've accepted the fact that price just goes up and down all the time, and that's how I trade. I don't try to trade every single candle. I accept the fact that hey, there's going to be waves, and you need to apply prudence to those waves. Like if you're in a boat or you're surfing or whatever, you need to understand you can use those like a surfer is a great example. I think a lot of people have tried to use this. Surfers use waves in their favor. Okay, that's what I do. I don't say, all right, here's a bunch of bullish candles, and I'm like, all right, bearish one, I'm out. Okay, if you are out, then you miss this whole move. I'm like, all right, what does this mean in the proper context? Because this structure, didn't even break the zone, right? And so that makes me think, all right, I can stay in as long as this structure holds. This one kind of confirmed that we would stay positive. We rallied from there. Okay. And so that's where I would kind of make that example, right? So anyway, going to the rest of this, RSI, basically no man's land, 68%, doing just fine. Let's go to the daily here. Daily, we're kind of in a mixed bag here. This is going to a different exchange. This is kind of what we are looking at. This is a long signal I proposed, like I think last week. But we're kind of in this middle structure here, and that's pretty much what I want to look at with this. I'll redraw this again. I usually redraw it for observations. And so this is kind of your your zone that we're looking at. And so this could be viewed here from the, I guess I'll probably do it from the candles. So I'm thinking that we'll get a kind of a touchdown here to about 67, 140. We pretty much have gotten that. So this is one reason why I think we could bounce here. I want to see this reaction. We do have a bearish wedge in play, which is at 50%. So we're looking at maybe 7 more days for this to hold. That's going to be very painful. But if we can hold 67, basically 67,000 on the weekly, I think that that is pretty decent. I think that's a pretty good fight for the Bulls to have. Now we'll see if we actually get that or not. So RSI is hovering. I think we might get a drop to 50. That would be a sign for me to try to long in this zone. So anyway, that's Bitcoin. Pretty short and sweet, relatively speaking. Like we are, 2 or 3 days into this week already. So um, I think as far as bulls, you want to hold this 67 140, pretty much. I think that's pretty much your only goal. I don't think there's any reason why we should just go up to 80,000 right now. Hold that structure. We're good to go. Um, there's a fight for momentum right now, and the thing is, it's a fight to. It's not a fight to who's going to have more momentum. It's a fight to see who's going to get last place. And so the Bulls need to step up. Um, and they're just not. They're just not right now. I don't think the market looks. I don't think the market looks that good. I honestly, not compared to what people are saying. I still think the market looks okay, but I think on CX now, I guess the there's people that are way more bullish than I think that they should be, and so we'll kind of see how that plays out. But anyway, that's Bitcoin. Let's go to Ethereum. All right, so on to Ethereum. Looking at the weekly structure here, first of all, had a very phenomenal, very big weekly candle. This is largely in part to the ETF news that we had, and so we had a pretty good response to that. You guys know my stance on news-based PA, and so I therefore think that this is a favorable event. And so we'll get into that more on the daily structure. But as far as this goes, we can map out the highs. This is the liquidity for the highs for the weekly structure. And then we also have this to a lesser extent, but still a prominent aspect of this chart is that we are at weekly resistance. And so this is pretty key. We pumped into weekly resistance, and that's one of the foundations why I think that we will fade this over the next 2 weeks. Something that I think a lot of people will be shocked by. That a lot of people want to I get it. I get it. Where the ETF news, we want Ethereum to go to 10,000, 20,000, and that may happen. I just don't think it's going to happen in a short amount of time. I've mentioned various versions of this statement that I think the problem with people trading crypto is that they think they can get rich quick when they can get rich in semi quick. And that's the thing, like people warp their perceptions of time and price. And honestly, Aaron has helped me with this because it's a price to time indicator. But you compare things to the stock market to crypto, right? Like stock market, like people will brag to you about making 30% per year. Well, I made 30% last week. And so how does that play into that, right? Well, like when in a bull market you're gaining 2,000% potentially versus somebody, that takes somebody in the stock market 10, 15 years, possibly even 20 years. And so how does that play into that, right? And so the problem is that most people are not satisfied with how accelerated those profits are in crypto. So we're not satisfied. We morph our perception of time. And I'm kind of rambling with this, but that's why we end up being overly emotional, why we think things are going to pump straight to, 10,000 on Ethereum is because of those perceptions, because of those false perceptions. You still have to take this in stride. And based off of what I see, we have a weekly resistance structure here. We did also have we did break out of this structure. I'll just do the candle bodies here. We broke above that structure, so that's pretty good. We did have a bullish breaker here, so we should come back down to 36.40, which I think that we'll probably do by the end of this week. And so that's pretty much it for the price action structure. As far as Aaron goes, We had a bearish cross at about the 25% marker, so it shouldn't have a big effect. That doesn't mean that we can't go down. And I mentioned this on X the other day as well. Like, a red candle does not mean that, a series of red candles, or even saying that I think will go down for the next week or two, does not mean that I'm bearish. It just means that I'm perceiving the current time frame of where the price will go. And so that could be a continuation pattern, or a flag that could be leading us to new highs, things like that. And so this bearish cross does not mean things will be bearish. It's a pretty weak one. Like I said, the lower on the spectrum, this is 30%. The lower number, the weaker that's going to be. 30% is relatively weak. You want it to definitely be less than 40, preferably 50. But this one's pretty weak in comparison. So we'll see. But that doesn't mean that we can't come down here. And so I still think that we could get that 35%. Excuse me. RSI is still looking fine. A lot of the RSI levels are going to be kind of pointless right now, because we're kind of floating in kind of no man's land. So let's go to the daily for this. And so one thing that I see here, I mentioned this on Discord, is that we have a bearish divergence here, um, at this weekly resistance. And so this is another reason why I think that we'll continue to go down. And so where do I see that at? Well, the RSI confirmation point for that divergence is going to be right here in the middle, basically 3760. And so if we get that, then I think we can continue to go downward. And I think that we might hit the 35. And so this one's tricky because we also have a bullish breaker as well. The breaker for that zone is going to be 3265. So we have a lot of, this is why I think that we're going to just chop for 2 weeks, because we have a lot of retest points to do on different time frames. And so that's going to take some grinding. So I'm not overly excited about Ethereum. I'm really not. What we need to do to invalidate all that is just mainly get above 4,000, close above 4,000. On the weekly would be the best option, I think, because that would satisfy the weekly. This closed above the weekly and this deviated. So we had a deviation. We had a wedge here. If I pick a different, I have all this homework done already. So this is the break that we looked at in Discord. We longed this, and so we already took advantage of this move, and now this move is already spent. And so this becomes a range break opportunity. The downside target is 3730, and then the breakout target is technically 4070, but I think 4000 on the weekly will be okay. And so because the top of that is actually like 3973. So if we break 4,000 on the weekly, then we're good to go. Aaron is very wide bearish on the spectrum, so that's again kind of leading into that downward momentum. I still think that that's going to be more of a chop, more of a continuation chop lasting 2 weeks. But that's going to get mixed interpretations. A lot of people are super bullish on Ethereum right now, and that chop, if that occurs, will tell people like, hey, maybe I got to fade this, and then they're going to be stopped out, right? On the second hand, it's going to get a lot of bears excited, and that it's going to probably fake them out. So I really think right now is the best opportunity for this chop to occur, because there are mixed signals right now. A lot of people think that this is super bullish right now because of the ETF. I don't disagree with the bullishness on the fundamental side. It's very bullish fundamentally. But as far as the structure, that, like, good fundamentals doesn't mean everything always goes properly the way that you want them to. So anyway, that's how I interpret this. I could be wrong. And so speaking on behalf of the whole Bitcoin section, like, I'm open to being wrong. Like, I'm not criticizing necessarily people like Donald, although I think that they should get um, a fair amount of criticism because they were so brash about their stance. Okay. And so instead of just admitting to be wrong, like, they kind of shift, and I'm not talking about him in particular, but just like, some people just don't want to even admit one thing wrong. I'm okay being wrong here, and that's not my point. You can also say that, like, you can, some accounts also do this, like, oh, I'm going to be wrong, and that's fine. Like, that's not my approach either. You need to take a healthy approach to try to get the best scenario of what you think will happen, while also having contingencies if what happens doesn't occur, if what you think happens doesn't occur. So it's not about being right or being wrong. It's giving your best guess, calculating that best guess, and having contingencies if that does not occur. That's what that means. And so, what are my contingencies here? If I am wrong, the range is going to be breaking out. Okay, so I think that we're going to chop in this zone between between 3730 and basically 4070. And if that doesn't happen, then we have range breaks, and so we can act accordingly. That's why I work level to level, because the contingencies help map out different market structures and positions. That is also why I tell people in the academy that you need to put your stop loss where the market structure will change. Okay, that's why I have looser stop losses than other people, but that's also why I have a higher probability of success, because I double down on my risk, knowing that those stop losses are usually going to hold. Sometimes my stop losses are 30%. And so I make up for that by adding risk. So you just got to play all that into that. So anyway, long story short, I think we'll have that range bound. I'm looking at 2 weeks period, but we'll see where that goes. So anyway, that's Ethereum onto Solana, and I think I'm sorry I did promise the memes. I think I got it for time's sake. I got to maybe make a second video from that, so maybe we can look for that another time. All right, on to Solana. I kind of just erased everything to kind of give us a better context of the charts here. I'm going to kind of take this off too. I think I'm also going to just get rid of this. And based off this, nothing really good happened as far as last week on Solana. We had a tap into this structure zone. So we do have that to work with. That is kind of a rejection, so that's not really good overall. We do kind of have this pivotal area here that I'm looking at. And so we tried to close above it. We rejected, and then we actually closed inside this range. So now that's kind of where we're stuck. The mid range of this is 154. That's where we need to hold to maintain that. And so I think that we can. I think that we probably might drop to 154, but we need to hold that. So basically, we're within a range of 154 and 174. Pretty much only thing that needs to be said about that. The problem with Solana here is that we have a pretty big cluster here to break through, and that I don't know if that's going to be very easy to do. And that's also a contention here. We've had a lot of contention around the high 100s and 200 range, and I don't know if that's going to be easy to break. Now, the good news is if we break that, or when we do, I think it's more of a matter of when. When we break that, it will be probably the price to hold. There's probably a chance that if we break above 200 again, that we will not break back down significantly back below 200. And so this is where long term is 167 a pretty decent price point. I don't think it's a bad price point by any means, but I think it's worth noting that this is still relatively low, I think, according to the top. I think this might top, this is just my personal opinion, not really based off analysis. I think that we'll top Solana at about $600. And so that, possibly even 500 on the low target. And so now you're looking at maybe like a 3x overall, 2.5, 3x. So just keep that in mind with that. As far as ARUN goes, we have a bearish wedge in play. Kind of working its way down, kind of trying to cross there. Again, this is that weekly structure I'm talking about. I kind of want, as much as I don't want things to be bearish, I kind of want a weekly bearish cross to occur, because that will reset the entire market, especially for Bitcoin. This will reset the entire market, and this will give you plenty of time to try to add on a trend. And so this is where, if you've been sidelined, if you've been, for whatever reason, not exposed as you want to, or you're too scared, or you're too emotional, and with understanding, obviously, if for some reason you're not exposed to the market and you want to be, and you don't know how to be, then a trend is the number one de facto method to do so, because a trend will always tell you what is trending. Okay, a trend won't flash crash. That's why I like trends so much. That's part of why it's part of my Apex system. The con about like price action. So we'll talk about Apex for just a second. ARUN, price action, exponential, like trend momentum, right? So ARUN, we're going to set that aside. Price action, the very good pros about this is that you can use these to look at bounce points, right? You can look at these like, hey, it's going to bounce relative to this zone, relative to that zone, right? But you're also going to get drop downs like this. Price action con, the big con about price action is that you cannot guesstimate how far something could drop or how something can be resistant, things like that. So like for example, you had a rejection here. So this was a good price action notification. Like you had your low right here, you had your follow through, and then you had your retest. But there's two things here that really hamper what price action really is supposed to do. You had a very big drop down right here, which that's a pretty big move that a lot of people are not prepared for. Like a 1 week 30% crash. I shouldn't say crash, but drop, whatever you want to call it. And so price action really doesn't help you with that. Doesn't really get you to understand that that is a possibility. Like, yes, it gives you a possibility that it will break through, but not necessarily that much. And so another example is we have a rejection here. And so you had a decent 18% rejection for 1 week, but then we continue to have more down to 80% just from this zone. Yes, that was part of the FTX situation, right? So we can all try to look at that for correlation. The point is, price action won't guide you in that direction. Trends will. Trends will understand, like, all right, you have a 200 EMA moving average, right? And so, for the most part, the 200 EMA will get respected for quite some time. If it drops, you still understand that, hey, it's above the 200 EMA. It still has a certain trend, right? So, yes, you could still get those drops, those big drops, but as long as it's within a certain time frame, it's still good. That's why if you don't know how to trade and you want to, I usually send people to look at a large EMA or a smaller EMA on a high time frame or RSI. RSI 50 is probably the best way to trade if you're a beginner and sometimes even for pro traders. And that's the thing, like we can talk about what it means to be a pro trader, but let's say, let's look at Solana here. Like Solana has been above 50 since right here. So let's take this high right here up to this zone. Okay, and so current price action, we're at a 600%. Have you made 600% on your bags since September of 2023? If you haven't, you need to trade the 50 RSI. Okay? Because that's not even the high, right? Like we even got higher than that. That's why I'm not against the RSI 50 at all, especially if you got spot portfolio. That's literally the best thing that you can do probably. That's probably the easiest. It's probably I don't want to say best necessarily, but it's probably the best R&R that you can get. It takes no effort to do that. It doesn't take any brain power to do that really. And it gets you a pretty decent return for especially as far as for the amount of time invested. That's a great return. It's a great return. So anyway, that's how we look at it from this structure. RSI here is kind of at 61, kind of floating around, like I said before. Looking for that weekly structure on ARD. Let's go to the daily here to kind of round out this video. So I do apologize, but I am kind of hurting for time. So I'll have to do a part two or something with the meme coins. So as far as this goes, this is a very tricky structure. We broke here, had a daily divergence actually, and then we kind of shifted up. Let's kind of get rid of that for now, just for the sake of understanding this better. Had a range high like so. You also had a liquidity area here, which got retested, so that's good. So this is your liquidity zone. So mostly wicks. There was candle body because you kind of have to. So you had a retest structure, another retest lows. Lows got swept, divergence, and then you had your markup phase. So that's what that looks like. Here, this cluster you could make as a fib rule, and guess what? Bounce at the mid. So now we are down below this structure. We retested that. This is a bearish retest. And so this is what I don't particularly like about this. It's a very complicated structure that has a bearish retest. So what I'm looking for is a drop down to this zone to retest this at about 158. That's what I'm looking at for this week. I think we'll get a bearish retest to 158, and then we can kind of try to flip this zone. So we're basically within a range here between 158 really, or 159 and 169. And so that's, again, we're playing a range bound here. The good news is we are close to that 50 marker, so we could get a bounce here. If we don't, then we're coming back down to the lower territory here. And that will probably be the middle of this structure, which would be 142. So Solana is very complicated. It's not super complicated, but it's not easy either. And so I think right now, or we're basically stuck between two ranges, and this shows you that there's a gap with that. So 150, basically 158 to 169. That's our structure. So anyway, that is Solana. Let's go ahead and do a quick summary, round out the video. All right, so going back to Bitcoin, what we talked about, with the weekly structure, kind of just in no man's land. We're hanging above that weekly structure zone, just waiting for a breakout range of the weekly. As far as you going down to the daily, I'm looking for a break here, a breakdown, not a breakdown, but like a support, a good solid support at 67,100. We may even have that now. This may even qualify, but we need to keep above the 67,000 for sure on the weekly. By the time weekly closes, Aaron is kind of telling us on the daily and the weekly that the bearish price action should continue or at least strengthen in momentum. I am specifically looking at the weekly Aaron on purpose. Like, I want a weekly bearish cross so that we can reload for the next cycle, because you don't get any, you literally only get like three chances on the weekly to reload. And this is why this is so critical. The last time we had a momentum change was October of last year. Okay, the last time we had a bearish weekly change was September of last year. So we're literally, what is it? We're 7 months into that. So we haven't had a change of momentum and trend structure for the ARIN in 7 months. So this is very crucial. And so what that means is, in order for us to go bullish again, we need to have another bullish change. So this would be your first change, your second change coming up, and then maybe a month later we have a bullish change. Hopefully the bearish one doesn't last long, but that bullish change is where we absolutely will be, super long. Okay, that's the time where I think once we get that bullish structure, that's where I would say you can forego a little bit of risk management, or at least up your risk with your risk management, because we're probably going to head up. But right now that's not the case. We need to cross bearishly on the weekly first. I think that we'll get that. And for Ethereum, we crossed above the zone, but we added some, a lot of bad news in response to that. We had a couple bullish breakers here. We have a bearish divergence. We also are at high time frame resistance. I think, long story short, you can go ahead and watch the other section, but long story short, we're going to get about a 2 week chop with this. And I think that that's relative to the environment that we're in. There's a big confluence and contrast, or there's a contrast of how we think this price action will go. Makes me just think that we are just going to chill here, and then it's going to make both sides, irritable in that regard. Going on to Solana, weekly structure isn't really that great, but long story short, for the daily, I think that we'll hit between that 159 zone and 168 zone, or basically the 160s is, a fight for that, and we'll play the break of that range. So anyway, let me know what you think. I'm happy to discuss things more. Like I said, I apologize. I'll have to make a meme coin version of this. I'll probably do that only on X. Probably won't upload that to YouTube, but go ahead and look for that. Also, keep in mind, yes, the Apex Academy is coming up. It's going to start on July 1st, and so the early bird sign up pricing will be on June 15th. You can sign up for the waitlist right now. And so in the next week or so, I think I'm going to start actually opening the doors if you want to actually move forward with your payment, but that won't be required until the 15th. I am requiring all payments before it starts, just to kind of work that out and get that done and over with. So anyway, that's the video. Let me know what you think. I'm happy to discuss things more, and I'll see you next time. Thank you.